In this video, we're going to continue our discussion about payroll taxes, but we're focused more on the employer's side of the payroll taxes. So what employers need to pay in order to hire employees. So employers are subject to the following payroll taxes for amounts paid their employees. This includes FICA tax, and remember FICA tax includes Social Security and Medicare. There's also something called Federal Unemployment Compensation Tax, and they give it the short name FUTA. And there's another thing called State Unemployment Compensation Tax, which is given the name SUTA. So FUTA this employer tax provides the temporary payments to those who become unemployed. And SUTA is the same thing, but it's on the state level. So the responsibility for tax payments, as you can see here, the government collects from the employee's Social Security, Medicare, and federal withholding tax. But for the employer or the business, they also have to match the same amount of Social Security tax, the Medicare, which we call them FICA, and then they have to also pay FUTA and SUTA. And again, as I said before, and I hate to say this again, but it's the fact that the government is actually collecting from both sides, especially the Social Security and Medicare. And I use the term like they're double dipping because it's the exact same tax, but we're taking it from both sides. So, recording payroll. The payroll liabilities are normally recorded at the end of each payroll period, and we'll see some information here that we'll use we'll use in order to record journal entries. So let's see this example. The following data for McDermott Supply for its payroll period ending March 21st. And this is what we have here for payroll tax rates, and the employee deductions. For payroll, you see here they have two types of salaries. They have the sales salaries, and these are typically salaries paid for salespeople. And then there's office salaries, and these are salaries paid for administrators and people who work in the office. And the total payroll is $25,000. Then we have salaries subject to payroll taxes, and you can see that Social Security and Medicare, they're subject to the entire value, which is $25,000. State and federal unemployment tax, which is the SUTA and FUTA, only applies up to $10,000 in this case. The tax rates, and again, this might be different from what we see in real life, but again, we are having it here for just simplicity. Social Security tax would be 6%, Medicare is 1.5%, SUTA is 5.4%, and FUTA is 0.8%. Then we have the employee deductions, which is the amount that we deduct from our employees, and that's because they are the employee's responsibilities. And we discussed that in the previous video, where we have the federal income tax withholding, we have the state income tax withholding, we have the retirement contributions, and we have the charitable contributions. And again, this is not only for one employee, but let's assume that this is for a number of employees. So the journal entry to record the March 21st payroll would be as follows. Remember, when we're paying salaries, these are expense. So for a business, from the business perspective, these are expenses. So that's why we see sales salaries expense and office salaries expense recorded on the debit side with the values that were given to us, $20,000 and $5,000. And then we owe the Social Security, the Medicare, and all these FUTA and SUTA. They're not paid right away. We usually pay them, let's say, once every quarter. So in this case, we have Social Security tax payable. It's based on the $25,000 multiplied by 6%, and that's $1,500. We have the Medicare tax payable, $25,000 multiplied by 1.5%, and that's $375. We have the employee's federal income tax payable. We have the employee state income tax payable. We have the retirement contributions, and we have the charitable contributions payable. So these are the amounts that we deducted from our employees from their paycheck. So that was the gross pay, and these are the deductions to give. At the bottom here we have $19,025. That's the net pay, and that's the amount that's salaries payable. When we paid, let's say at the end of the month, then we debit salaries payable and we credit cash. Or it could be also paid like on a regular basis, but we record it first as a liability to the employees, and then we debit salaries payable and credit cash as part of the regular payment for the employees. Employers also must match the employee's Social Security and Medicare taxes, as I mentioned earlier. In addition, an employer must pay state and federal unemployment compensation taxes, which we refer to them as SUTA and FUTA. So the calculations for these would be the Social Security, again, it's the same amount, $25,000 multiplied by 6%, which is $1,500. Medicare tax, $25,000 multiplied by 1.5%, and that's $375. The SUTA is based on the $10,000, as was mentioned before. And again, I'll go back to the given information, and you see here they say salaries subject to payroll taxes, and for state and federal unemployment tax, it was only $10,000. So this is why in our calculation here for SUTA and FUTA, we use the $10,000, not the $25,000, and we multiply by 5.4, 0.8% for each one of these. And we got $540.80, and the total payroll taxes is $24.95. So this is additional expenses that we have to incur in addition to paying salaries to our employees. So the journal entry for that would look as follows. So we're going to debit payroll tax expense, which is the $24.95, and then we list all these payables, which is the Social Security tax payable, which is different from the Social Security tax payable that was deducted from the employees, but it matches the same amount. So at the very end, the amount that's going to be paid to Social Security would be $3,000 because $1,500 were deducted from the employees, and our share is another $1,500. Same thing for Medicare tax payable, it's $375, which matches what was deducted from the employees. Then we have the SUTA and FUTA, $540 and $80, and all of these are liabilities that are created, and we record them on the credit side. So when the preceding liabilities are paid, a journal entry is then recorded debiting the liability accounts and crediting cash. Now let's see how we're going to pay the payroll. So companies pay employees either by electronic fund transfers or by issuing payroll checks. I think nowadays a lot of employers are encouraged to use electronic fund transfers, and they encourage their employees to accept this form of payment because handling checks is something that can invite fraud, and just to avoid that, it's better for the employer to directly deposit the employees' salaries into their checking accounts or in their banks. So with electronic fund transfer, the employee's net pay is electronically deposited into their bank account each period. The employees receive a payroll statement summarizing how the net pay was computed. Most companies use a special payroll bank account for payroll, and I've noticed that because they don't want to mix their regular expenses with payroll expenses. It's always good to have a separate bank account for payroll expenses, and what they do is that they fund every month an amount that would be enough to make payments for payrolls or payroll expenses, and that checking account would only, or that separate bank account would only handle all these kind of payments related to payroll. And what's the advantage of that? An advantage of using a separate payroll bank account is that reconciling the bank statement is much more simplified that way. Now let's talk about internal controls for payroll. Some examples of payroll controls include hiring and firing of employees should be properly authorized and approved in writing, because in some cases we can see that a company would hire fake employees and they start making payments, and these payments, they go to employees who don't exist, and that can be problematic. Another example would be all changes in pay rates should be properly authorized and approved in writing, because we don't want to start raising salaries or rates for some employees without getting approval, and that can again be also very problematic. Employees should be observed when arriving for work to verify that employees are checking in for work only once and only for themselves. Employees may check in for work by using a time card or by swiping their employee ID card. And of course, nowadays with technology, there are many different forms of checking in methods that actually work very effectively and also efficiently. A special payroll bank account should be used, and that's a way of also good control for payroll. Now let's talk about employees' fringe benefits. And what are the fringe benefits? These are benefits in addition to their salaries and payments. So many companies provide their employees benefits in addition to salary and wages. Such fringe benefits may include vacation time, medical benefits, or retirement benefits. The cost of employees' fringe benefits is recorded as an expense by the employer. So let me stop here. In the next video, I'm going to be going over vacation pay and pensions, and we'll see how these are recorded.